Turning now to some mixed signs when it comes to the state of the U.S. economy. The core consumer price index, that's the key measure of inflation watched closely by the Federal Reserve. Well, it jumped to 3.1% in July. It marked the largest gain in 6 months as companies grapple with the president's trade war. But there was encouraging news on Wall Street yesterday. Take a look at that. The S&P 500 and the Nasdaq closing at record highs. So what does it all mean for your bottom line? CNBC's Andrew Ross Sorkin, co-anchor of Squawk Box and a columnist for the New York Times, joins us now from the Nasdaq. Andrew, good morning. Nice to see you. Help us understand how we should be reading these latest inflation numbers. So many analysts said prices were going to soar from tariffs, but that hasn't exactly happened.
Well, thank you. There's a couple of things going on, and I think the new numbers reflect this. You have the first sort of real signs that inflation is starting as a result of those tariffs to find its way into the economy, but just a little bit. And actually, as you just mentioned, a lot less than people had expected back in April. Now, back in April, there was these expectations that tariffs were going to be at 145% for the Chinese, for example, and that was going to have a huge impact on us. The president has delayed and continued to postpone those tariffs as those negotiations continue. But there is starting to be an expectation that come this fall, prices are going to go up. We had a lot of companies in America effectively eat the costs of those tariffs. For example, Ford lost $800 million in a quarter. And so there's a sense that some of these companies are going to start to have to raise prices. The other piece of this is a lot of companies started to bring merchandise from outside the United States into the country as fast as they could in April, in May, in June to avoid tariffs. Yeah. But now as we get into the fall, some of those prices may go up. Now, you may say to yourself, well, why would the stock market go up if things are actually going to get tougher? Well, the other piece of this is there's a chance the Fed may lower interest rates, and that's in part because the labor market is starting to slow. So this is one of these very strange situations where bad news in the economy may actually look like good news in the stock market because the Federal Reserve might lower those interest rates to try to make things a little bit better.
All right, Andrew Ross Sorkin, appreciate your time breaking it down.
Hey, thanks for watching. And don't forget, you can catch the Today Show every morning on NBC or take Today when you're on the go. Just follow the Today podcast on Apple Podcasts, Spotify, or wherever you listen.